Are you part of a religious organization in the UK and you want to make sure you're making the most of every single pound you raise? Well, you're in the right place. In this guide, brought to you by the experts at Pro Tax Accountant, we're going to walk through the essential tax exemptions for the 2025-26 tax year that could save your organization thousands.
Okay, let's dive right in. For so many faith groups, the key to success isn't just about great fundraising, it's about making those funds work harder for your mission. You know, understanding the tax exemptions you're entitled to can free up thousands of pounds to put right back into your community work. This guide is here to show you exactly how.
So, what's the first step on this journey? It all comes down to one crucial thing: your organization's charitable status. You see, the advancement of religion is a legally recognized charitable purpose in UK law. Achieving that official status is like the golden key. It's the gateway to almost all of the significant savings we're about to talk about. It really is the foundation for everything.
We've broken this down into 6 key areas. We'll start with that all-important charitable status, then look at property reliefs, get our heads around VAT, cover the rules on trading, boost your donations, and finally, touch on legacy giving. So let's get started. First up, let's properly look at the cornerstone of all these benefits, securing your organization's official status as a charity. Right, so this specific legal recognition under the Charities Act 2011 is what gives HMRC the green light to grant your organization all sorts of tax exemptions. It's the official confirmation that your main purpose serves the public good, and that's the whole principle behind these tax reliefs. Okay, now that we've got the foundation sorted, let's talk about one of the biggest expenses for pretty much any organization: your buildings and all the bills that come with them. And as you'll see, there are some huge potential savings here that can really slash your overheads. This is a big one. As a registered charity, your organization is automatically entitled to a mandatory 80% relief on business rates. This applies to any property that is used wholly or mainly for your charitable purposes. This isn't a maybe. Your local council has to give it to you. That's a massive chunk off your bills right from the get-go. But hold on, it can get even better. This is how you can go from that 80% all the way up to a full 100% exemption. The key phrase here is place of public religious worship. It has to be genuinely open to the public. For instance, some Mormon temples, which are only open to members, have been challenged in court and found not to qualify for this full relief. It just shows how important that public aspect really is. And the savings don't just stop at business rates. There's more help available for specific costs. If you happen to be looking after a historic listed building, you can actually reclaim the VAT on eligible repairs through a special grant scheme. And for your everyday running costs, your energy bills can qualify for a much, much lower rate of VAT. That's not all. Here's where a lot of people go wrong, so pay close attention. That reduced 5% VAT rate on your energy bills, it doesn't happen automatically. You have to be proactive. A simple phone call to your gas and electricity supplier to give them your charity registration number could save you hundreds, maybe even thousands of pounds every year. It's really that simple. Okay, let's move on to our third section, VAT. Now, I know this can feel incredibly complicated, but getting a handle on the key rules is absolutely crucial for your organization's financial health, and it can unlock some really surprising savings. For the 2025-26 tax year, this is the magic number to keep in mind. Your organization only has to register for VAT if it's income from what are called vatable sales, so things you sell that are subject to VAT, goes over £90,000 in any 12-month period. If you're below that, you don't have to register. Now, here's a really interesting point. Even if your turnover is way below that £90,000 threshold and you aren't VAT registered, your charitable status itself unlocks savings. It means you can often buy goods and services at reduced or even zero rates of VAT, avoiding that full 20% standard rate that everyone else pays. Let's make this real. For example, say you place an advert in a local paper to publicize a fundraising event, or you install a new hearing loop system for your congregation. In both cases, you should be paying 0% VAT. The same goes for the construction of a brand new building that's going to be used for your charitable work. So how do you actually get this relief? Well, it's usually pretty straightforward. You don't have to fill in a load of complex HMRC forms. Most of the time, you just give your supplier proof that you're a registered charity, like your registration number, and they'll sort out the invoice. It's a simple step that makes sure you get the relief you're entitled to. So many organizations generate a bit of extra income to support their mission, right? From running a small bookshop to renting out a hall. So let's explore how that income is treated for tax, because not all of it is treated the same way. The crucial thing to understand here is the direct link between the trading and your organization's core mission. If a cathedral runs a gift shop selling items related to its own history, that's called primary purpose trading, and all the profits from that are tax-free. But what about trading that isn't directly related to your main purpose? Like, say, renting out your car part to commuters during the week. Well, there's good news there too. You can still be exempt from tax on those profits as long as the turnover from that activity stays below these small trading exemption limits for the year. And this is just a vital exemption. It supports the huge majority of community fundraising events, things like bake sales, concerts, or local fetes. As long as the event qualifies and every penny of profit is channeled back into your charitable work, you don't have to worry about tax on the money you raise. Okay, stay with me, because this next point might just be the most powerful one of all. We're going to look at how you can generate a lot of extra income from the donations you already get without asking your donors for a single penny more. This is the power of gift aid. It's an incredible scheme, really. For every £1 donated by a UK taxpayer, your organization can claim an extra 25 pence directly from HMRC. It's basically a 25% top-up from the government, and it costs the person donating absolutely nothing. If you receive £10,000 in donations, that's an extra £2,500 for your mission. And it really is this simple. First, your donor makes a declaration, which can just be a simple form that covers all their future donations too. Second, you receive their donation as normal. And third, you submit a claim to HMRC to get that 25% boost. It's a straightforward process that can increase your donation income by a quarter. But what about loose change in a collection plate or a quick tap on a contactless machine? That's where the Gift Aid Small Donation Scheme, or GASDS, comes in. It's absolutely perfect for those small, spontaneous donations, allowing you to claim a Gift Aid-style top-up on up to £8,000 of this kind of income each year, without needing a declaration for every single coin. Finally, let's touch on our last section. It's a sensitive topic, but it's incredibly important for the long-term financial health of many organizations: legacies and inheritance tax. The rule here is simple, but it's so powerful. When someone leaves a gift to your registered charity in their will, that amount is completely exempt from inheritance tax. It gets deducted from their estate before any tax is calculated, which means the full value of their legacy goes directly to supporting your important work. Now, what's really interesting is that legacy giving doesn't just benefit the charity, it can also help the donor's other beneficiaries. You see, if a person leaves at least 10% of their net estate to charity, the inheritance tax rate on the rest of their estate is actually reduced from the standard 40% down to 36%. It's a powerful incentive for charitable giving that can benefit everyone. So, let's have a quick recap of the key takeaways. Gaining charitable status is your essential foundation. From there, you can claim 80 to 100% relief on business rates, cut your utility bills with lower VAT, boost donations by 25% with gift aid, and benefit from completely tax-free legacies. Mastering these areas can honestly transform your organization's finances.
Right, it's really important to remember this. While this has been a comprehensive overview, UK tax rules can be complex and they're often specific to your unique situation. So please treat this information as a general guide to show you what's possible, not as formal financial advice.
For that reason, before making any financial decisions based on what you've learned here today, we strongly recommend seeking professional advice. That way you can be sure you're fully compliant and are maximizing all the benefits available to your specific organization. To discuss anything from this guide, or for help with any other tax issues you might be facing, please don't hesitate to get in touch with the expert team at ProTax Accountant. You can reach them on WhatsApp or by phone at 07985 689 912, or just drop them an email at info@protaxaccountant.co.uk. And for a detailed written version of this guide that you can refer back to anytime, please visit the ProTax Accountant blog at the address on your screen. And finally, if you found this helpful, please subscribe to the ProTax Accountant channel for more expert guides. Thanks so much for watching.